On Thursday, June 26, Nike NYSE (NKE) reported its fiscal fourth quarter earnings. As a result of its top and bottom line miss, shares are under pressure in after-hours trading. If there is more selling pressure, this could be a buying opportunity for Nike stock. Source: Tai Lim, Shutterstock.comWhy. Buy if the quarter was uninspiring. Simple. Because Nike is a very powerful brand with a loyal customer base. It's one of the very few apparel and retail brands that will continue to do well, with or without the novel coronavirus, and will not see its business fall off the face of the earth. Let's look at the quarter before we go any further. A Surprise LossNike generated a loss of 51 cents per share in the quarter. That was a surprise loss to Wall Street, with consensus expectations calling for 3 cents per share in profit. That's as revenue fell 38% year-over-year to $6.31 billion, missing estimates by $950 million. Think about those headline numbers for a minute. Within the apparel group, Nike stock is among one of the best-positioned names in the space. Earlier this month we heard from Lululemon, NASDAQ, LULU, which also has a loyal customer base. The company also missed on earnings and revenue estimates as the coronavirus weighs heavily on sales. Both companies leaned on e-commerce to pick up the slack, but still, this was a difficult quarter. Now what are the rest of the companies in this space looking like, the lower quality companies? I'm afraid to ask. In fiscal Q4, gross margins came in at 37.3%, well short of expectations at 43.3%. It's as if years of careful, meticulous work has been undone in one quarter. On the plus side, online sales soared 75% for Nike, as customers turn their attention to digital sales. That figure climbs to 79% on a currency-neutral basis and represented about 30% of total revenue. From CEO John Donahoe, in a highly dynamic environment, the Nike brand continues to resonate strongly with consumers all over the world as our digital business accelerates in every market. We are continuing to invest in our biggest opportunities, including a more connected digital marketplace, to extend our leadership and fuel long-term growth. Then from CFO Matt Friend, as physical retail reopens, Nike's strong digital trends continue, a testament to the strength of our brand and the investments we've made to elevate digital consumer experiences. Valuing Nike StockI ended that last section with 2 quotes, because they are far more important than 1 or 2 quarters worth of numbers. I don't mean to say that earnings are not important. But clearly we know this is a highly disrupted period due to COVID-19, and amid short-term chaos, investors need to focus on the long-term opportunities. Clearly, those opportunities are presenting themselves in the digital space. Both the CEO and CFO mention such, and while I agree with that assessment, it's not just because it's what management said.